Hey everyone, and welcome to my channel. So I made a couple of videos about Kraft Heinz over the past few days, and I have spoken very optimistically about Kraft Heinz. Now, my investment, if you're curious, in Kraft Heinz is down about almost 50% at this point, which doesn't worry me at all. Short-term fluctuations are just buying opportunities as long as you know what the company's worth. So I'm not worried about that. However, there is one thing about Kraft Heinz that is worrying me right now. I saw an article recently being a couple days ago, I'm just got around to recording about it now, that Kraft Heinz is apparently considering liquidating its assets in order to reduce debt. And given the way that the food industry works, I think that is a terrible idea. And I'm afraid that the CEO is being pressured into doing things just to make it look like Kraft Heinz is doing something to make change. That isn't necessarily wise. They are looking at selling their Maxwell House coffee brand, which brings in about $400 million in revenue a year before taxes. Now, a lot of people are really concerned that Kraft Heinz revenue isn't really growing, and it is growing slowly. But what people have to understand is that Kraft Heinz business model has been to dominate shelf space in grocery stores and retail. That is where a majority of their sales come from. And that being the case, if these brands, Kraft, Heinz, Oscar Mayer, Smart Ones, Velveeta, well, that's technically a Kraft brand, I suppose. But you get the picture. All these products, Jell-O, for instance, are dominating shelf space already. They have been dominating shelf space for decades. What kind of growth did you expect? Seriously. If most of their sales already come from that, then what do people are talking about slowing revenue growth. Well, what do you expect? The company's already arrived. It's already profitable. It makes $6 to $7 billion and $7 billion of tangible assets. And you want revenue growth? That's a great ratio of income to assets. And people are saying, well, it needs to grow. The revenue needs to grow. And then they talk about how Kraft is losing out to these indie brands and these individual private label brands that have healthier alternatives. And Kraft Heinz could easily turn around and make more healthy products if they wanted to. Now the question is, why didn't Kraft make those healthy products? Well, it's because the market did not want healthy products at the time that Kraft Heinz started, that Kraft and Heinz started their business. That's the answer. You see, demand drives the products. And if there's no demand for healthy things, the people would prefer to pay less for things with high corn fructose syrup and all that. What do you expect a business to do? They're going to pander to the people who want those things if they're in the majority, because that's how you make money in business. You meet demand. It's not complicated. It's serious. I see all these people talking about these stocks and everything, and I don't want to talk down to anybody in particular, but you see these comments, and you just wonder if they really understand the food industry at all. And I don't think a lot of these people that are commenting on Kraft Heinz on YouTube really understand what's going on here. Kraft sales were up 0.7%. Now people go, oh, well, 0.7%, that's not a lot. But when you're making $6 to $7 billion and $7 billion in tangible assets, that is great revenue already. And you can't expect a lot of growth whenever you already dominate your business, dominate shelf space when that's your business model. It's just ridiculous. Now, I'm afraid that Kraft Heinz is going to undermine its own business model by liquidating these brands. Maxwell Coffee has a great presence in retail and grocery stores. I think selling them would be a mistake. Now, they do make about $400 million a year prior to taxes, which isn't necessarily a lot in the whole grand scheme of things when it comes to Kraft Heinz income. However, the Maxwell, they think they can get $3 to $4 billion for it. That's pretty good. If they can get $3 to $4 billion, that is pretty good. But I'm afraid while it may look good short term, I think long term, giving up shelf space to other brands is a horrible idea whenever you're already dominating it. Why would you give up that dominance that's propping up your business? That is the one thing about Kraft Heinz that concerns me right now. And I'm afraid that a lot of times these companies, when something goes really wrong short term, they want to make these actions and make it like there's change so that more investors will be attracted to the stock. The stock's down almost 50% now. And for me, if it goes down by 50%, if it gets to that 50% mark, I'm probably going to buy a little bit more into Kraft Heinz. I don't think that liquidating would destroy the brand, but I think it would hurt its revenue in the long run. A lot of people will buy from grocery stores and retail for their groceries now than they would buy groceries online, because right now there's a lot of logistic issues with buying certain types of groceries online. So you might as well go to the brick and mortar store and buy those things. I think that Kraft Heinz is going to be making a big mistake if they start liquidating these brands, even the ones that don't bring in a whole lot of revenue like Maxwell. And I think that Kraft Heinz model of acquiring businesses that have shelf space in grocery and retail stores is a brilliant idea. Now, Kraft Heinz could, since the market's kind of in more towards that direction, start making more healthy products, and Kraft Heinz actually has. But I think that a lot of people who do grocery shopping are less likely to buy healthy stuff because it hasn't really helped them much. And it's not so much the brand that's the problem. It's the fact that I think a lot of people who buy healthy things tend to be online shoppers, because a lot of these people who really are health conscious are younger people, and a lot of younger people are more aware of things online. You know, they might follow Instagram influencers that have their own brand, or YouTubers that have their own brand. You know, and I'll give an example that has nothing to do with the food product industry. Alpha Male is a YouTuber who has this shampoo brand called Pete. Well, not really shampoo brand, but he has a line of shampoo from his Pete and Pedro brand. It's the primary ingredient is treatment oil, and I actually use his brand. You know, I use Alpha Male's brand of shampoo. I love it. I think it smells good, and my hair feels good after using it. And I prefer it to a lot of the stuff I find in grocery stores that have all these artificial ingredients. You know, but I buy those online. And I think a lot of people who are more concerned about health is buying their products online. Now, one thing that Kraft Heinz could do is go to build revenue and to build off of its distribution advantage, is they could start offering their products online at a cheaper price than what is sold in the grocery stores. And they could focus on marketing their healthy products, since that's the audience they're going to reach. They could start doing ads on YouTube, for instance. YouTube ads are really cheap in comparison to other types of advertising. That's one of the reasons why YouTube is so successful as a business for Google. So that's one thing they could do. So if they want to build revenue, their best option is not to liquidate and try and streamline their company. They need to have the shelf space in those grocery stores, but what they really need to do is start increasing online distribution market share. They should start working towards that. And Kraft has so much money, you know, for that they could use for investing, you know, that's backed by Warren Buffett and 3G Capital. If they start investing in marketing those more healthy products to the millennials and the younger people who are concerned about health, and then with their great distribution ability, you know, when you have good distribution, you can produce things cheaper because you can produce more, and you can get a cheaper price for whatever you need to make those ingredients if you're doing more at a time. That's how Walmart keeps their prices so cheap. They buy a bunch of things in bulk for a cheaper price, and that allows them to undercut a lot of other stores. Kraft Heinz could do the same thing to the private label brands with their superior distribution ability. That's the key for Kraft Heinz to succeed. If Kraft Heinz realizes this, then anyone who bought in the Kraft Heinz stock when it went down is going to make a lot of money. Now, if they do not, then Kraft Heinz will still be fine, but they really need to focus on on distribution and marketing online these healthier products so that they can increase revenue. That is the way to do it, because you can't increase revenue by grocery stores and retail by a lot if you already dominate the shelves. So you just can't do it. They could also diversify. Now, Kraft Heinz doesn't have enough money to acquire a brand like Leggett and Platt to diversify, which is another option for Kraft Heinz, is diversifying even more. That's what they've done, and that's one of the reasons why they've gotten as big as they have. But, you know, it would actually be interesting to see Leggett and Platt and Kraft Heinz do a merger. Now, I think that's a really far off possibility. I don't think that's going to happen. It'd be interesting. It would be, I think, honestly, it's something I'd really like to see. But I don't think that's not even on the table, I don't think. So that's just me dreaming. So anyway, so my concern is that Kraft Heinz is going to start liquidating and giving up, and give up their distribution advantage that they already have had for decades in the grocery stores through Kraft and Heinz when they were separate companies, and then these other brands. So that is my opinion. This is the one thing that concerns me about Kraft Heinz right now. I think that liquidating is a terrible idea because it undermines the very business model that made Kraft Heinz into the giant company that it is today. So what is your opinion? Do you agree with me? Do you have any suggestions for Kraft Heinz? Do you maybe not like Kraft Heinz as an investment? Just feel free to leave a comment. And also, if you have not subscribed, just feel free to subscribe. If you like the content, I will be doing more videos in the future. Hopefully not any more about Kraft Heinz anytime soon, because I'm starting to get, honestly, I'm starting to get tired of talking about it. But since I am invested in Kraft Heinz, when things like this comes out, I just feel like I need to talk about it and give my opinion. Because you all have seen my portfolio, and you all know I have a big holding, so I don't want to stay quiet about it. I also have a Patreon account, so if you really like my content, please consider becoming a Patreon. I have a link to that in the description below. I hope you all have a great rest of your week, and God bless.